Good afternoon, ladies and gentlemen. My name is Michalis, and I'm one of the markets analysts here at HF Markets. And I'd like to welcome everybody to another live analysis. Today's live analysis, ladies and gentlemen, we're going to be looking at two major events. We're going to be looking at events which is now taking place and is largely going to affect the British pound. It's also going to affect UK stocks. It will definitely affect the FTSE 100. So we're going to see a lot of volatility on all of these assets. However, we are going to look at two other events simultaneously. We're of course going to take into consideration the elections from yesterday and their results because it's something which is affecting and influencing all tradable assets around the world, and it's generally speaking creating a lot of volatility. For example, for the S&P 500, it was the best post-election day for the S&P 500 in its history. So that's a massive amount of volatility, which of course it created very strong trends, a lot of price movement in one single direction of the market. So generally speaking, it was quite easily able to have been traded and determine the price movement. Very simply because there wasn't a lot of up and down volatility and a lot of conflicting signals. So we're going to look at the elections which happened yesterday and confirm how it's going to continue influencing the market. We are definitely going to look at the BoE, especially the Monetary Policy Committee votes, which that particularly creates a lot of volatility and can definitely influence the price movement of the pound. And the next thing we're going to look at is, of course, preparing for the Federal Reserve, because there's something very key that we need to look at in regards to the Federal Reserve. It's going to be a very different announcement compared to the Bank of England. The Bank of England, we know what their interest rate cut was going to be. The only thing we don't really know is how many people would have voted for it. And to be honest, we know what kind of forward guidance they're going to give. But for the Federal Reserve, we've seen a very big change compared to forward guidance from last week to forward guidance going forward. Very simply because there's been a change in the House, there's been a change in the Senate, and there's going to be a change in the presidency as well. So that's definitely something that's going to be very, very interesting. Now, with our live analysis, we're not going to look at presentations. We're not going to look at theories and look at the live analysis in that kind of educational sense. We are going to, the live session is for educational purposes, but we're going to do it live on the MT5, which is why, particularly, it is something which is very, very educational. Now, for we're going to start off with the BoE, the rate decision, the monetary policy votes as well. And to do that, we're going to go to the HFM calendar, which is one of the most advanced calendars in the financial trading markets, ladies and gentlemen. Now, because it's a very advanced calendar, it has a lot of announcements on it. It's not like one of those calendars where it has 2, 3 announcements. It has a lot of announcements globally. So, in order to get rid of those announcements, because today we're not looking at the market in general, we're looking at something specific. For the moment, we're looking at the BoE's rate decision. So I'm going to remove all of the countries. I'm only going to add the United Kingdom, and I'm not going to include the yellow bars and above as well. So let's filter that. And here we go. We got the Bank of England here, ladies and gentlemen. So, like I said, we were expecting the Bank of England to drop and adjust their main refinancing rate, the Bank of England base rate basically, by 25 basis points. Indeed, they did decline it decreased it by 25 basis points. To be honest, that wouldn't have had a lot of volatility within the market. Why? Because, ladies and gentlemen, it's something which has already been priced within the market. So that's something we need to take into consideration. But what is very interesting is the amount of people which are voting for a cut. So you can see Monetary Policy Committee vote rate unchanged. So how many people are voting for the rate to remain unchanged? vote rate cuts, how many people voted for rate cut, and how many people voted for a hike. Of course, we weren't going to get any individuals voting for a hike. Inflation in the UK has declined significantly. It's more or less at its target, to be honest with you. The only reason why they haven't previously voted for a rate cut is very simply because they're still backlogged inflation. So, because of that, they delayed cutting interest rates and they prefer the more cautious, conservative, slow but frequent rate cuts. Now, what was different? The difference, ladies and gentlemen, is these two announcements here. We were expecting two individuals to vote for the base rate to remain unchanged. So, two individuals to be slightly more conservative, cautious, and not want to cut interest rates. Actually, it was only one. So that is something which is extremely dovish, especially if you're going to compare it with this here. Because there's only nine members, ladies and gentlemen, of the Monetary Policy Committee. And from those nine members, seven were predicted to vote for a rate cut, but but eight actually voted for a rate cut. So that is something much more dovish when we're looking at not necessarily the interest rate decision itself today, but the view of the nine members of the Monetary Policy Committee. So that's something which is very important, ladies and gentlemen. That, generally speaking, is something which is negative for the British pound. But what I will say, ladies and gentlemen, is the British pound is actually one of the best performing currencies of the year. Why is it one of the best performing currencies of the year? Partially because the euro has been very poor, and always an alternative for the euro tends to be the British pound. In addition to this, they're one of the very few central banks that stayed hawkish throughout the year. Whereas the Federal Reserve, at certain times, they seemed very dovish. For example, at the very beginning of the year, also they cut 50 basis points a couple of months ago. The European Central Bank has been dovish throughout the whole of the year, to be honest with you. And the Bank of Japan has failed to live up to expectations. So that's one of the reasons why they've been one of the best performing for the year. So if we look at the year performance of currencies, you can definitely see, of course, the best performing, ladies and gentlemen, is the US dollar. Of course, it's the best performing. Yesterday alone, it increased in value by 2%. So that's, of course, a very clear answer. But the second best performing, ladies and gentlemen, you can see here is the Great British Pound, which so far this year has increased by 1.32%. That's more, like you can see here, than the Australian dollar, which is the best performing today, actually. The Australian dollar more than the euro, more than the Canadian dollar, more than the New Zealand dollar, and more than the Japanese yen, which this year has declined 12%, almost 13%. So even though that's something which is negative for the Bank of England and the Great British Pound, the fact that we had more people vote for rate cuts than previously expected, because people will take that into consideration for the next meeting. They'll say to themselves, from nine members, uh, eight voted for an interest rate cut. So there's a high possibility that they're going to continue cutting interest rates. Whereas if we saw six members vote for an interest rate cut, yes, there still would be an interest rate cut, but people would say, they've cut interest rates. Only six members out of the nine wanted to cut interest rates. So next time, especially if we get some decline in inflation in the meantime, next time they're not going to opt for that scenario. Should we say, there's a lower possibility for them opting for that scenario because there's less members of the MPC which voted for an interest rate cut. That's not the scenario, though. We've had more than expected. Nearly all of the Monetary Policy Committee voted for an interest rate cut. So there's a very strong possibility that that's going to be a reoccurring trend. Like I said, that, ladies and gentlemen, is negative for the Great British Pound. Nonetheless, though, here we can see very clearly, here we can see the British pound against the US dollar. The British pound against the US dollar has increased in value. To be honest, it hasn't increased in value by much if we're taking into consideration that it's an interest rate decision. Um, but what I want people to be aware of is that it's increased in value here on this currency against the worst performing currency of the day because the US dollar has been correcting upwards. Because yesterday we saw a lot of volatility and gains for the US dollar. So it's understandable that it's declining, ladies and gentlemen, and retracing today. But taking into consideration that we've definitely had some hawkish, a dovish announcement, we have to, of course, take into consideration that this price movement is quite a limited price movement. So, is that price movement indeed going to continue, ladies and gentlemen? This is something, of course, we need to take into consideration. Now, there's a couple of things I want to look at. Let's go on to a different time frame, actually. Bear with me. Let's go. Here we go. So let's go to the British pound against the US dollar, also known as the cable. Now, if we're looking at a 2 hour time frame, ladies and gentlemen, we can see we're trading below the 75 bar exponential moving average. That's known as a very key level, a key trend line. In addition to this, we're trading still below the 100 bar simple moving average. So both of them are indicating, even though we've had some correction upwards, that buyers potentially may regain control of the market. Buyers in the US dollar, by the way. So for the British pound against the US dollar, it's actually sellers. So keep that in mind. And also keep in mind that the price is finding resistance at this key level here. It's not unknown for when we reach that level to find resistance at that level. So, for example, look at this here. We went to that level again. It declined. We attempted again to go to that level. It declined. Attempted again, and then it declined. And then it wasn't until the fourth attempt. This is the fourth attempt here. We actually managed to get to a significantly higher level. So we need to take that into consideration. At that 75 level, between the 75 and 100, the price tends to find resistance there. And like I said as well, the British pound potentially can come under pressure from the fact that more individuals voted for an interest rate cut than that which was previously expected. So this is a very key level, ladies and gentlemen, because this is a level where it's a resistance level, and it's also a level that's right in between those two levels, which tend to see trader psychology change. The only thing that potentially we can take into consideration, which may indicate a slightly more hawkish scenario, is if we look at here, we've got a low, we have a low here as well. We also have a low here. If we look at the highs, we have a high and we have a high here. So we're seeing three lower lows, we're seeing two higher highs. We're trading above the 50 level, which is indicating that maybe buys are starting to control the market, but we don't have a clear signal. At the moment, it's still conflicting. Why? Because we're below the 75 bar exponential moving average. We're also below the 100 bar simple moving average as well. So that's definitely something we need to take into consideration, ladies and gentlemen. Now, for those individuals that want to speculate that the pound is going to increase in value, we always need to look at currency pairs, not as a single asset, but as three individual assets. It's like, for example, if you're trading a stock, individuals tend to analyze that stock. They'll analyze that stock, they'll analyze the stock market in general, they'll analyze companies in that sector, in that industries, they'll analyze that company's financial reports. But it's all related to that one asset. The same thing applies to ETFs, same thing applies to cryptocurrencies, and so on. But when you're looking at a currency pair, there's benefits to actually analyzing it as though it's three different separate assets. You're analyzing, for example, for the cable, you're analyzing the British pound individually. How is the British pound performing against the whole of the market? And then you're analyzing the US dollar individually and how it's performing against the whole of the market. And then you are analyzing it as a single asset. So it's like it's three assets: the British pound, the US dollar, and then the currency pair itself. So keep that in mind, ladies and gentlemen. Um, Now, like I said, if we want to speculate that the pound is going to increase in value, because of course that's completely down to you, and we have to take into consideration the latest bars an upward facing bar as well. So bullish bar, bullish candlestick. There is benefits, ladies and gentlemen, to of course speculating the increase of the British pound against the Swiss franc, okay, because the Swiss franc is the second worst performing currency of the day. The only reason I'm not going to say the US dollar is because the US dollar saw a very strong price movement yesterday. The Trump trade is known to significantly support the US dollar in the longer term. And in addition to this, we also have the Federal Open Market Committee speech tonight and rate decision as well. So the scenario of the US dollar can very quickly change, whereas nothing is expected for the Swiss franc. The second worst performing currency after the Swiss franc is actually the euro as well. So for individuals that want to speculate a positive price movement for the British pound, they can take into consideration the British pound against the Swiss franc. So here we go, ladies and gentlemen. Now just compare the two. So even before I've looked at this chart, compare the two. There's a reason why I say everything. There's always a reason for everything that I say. Here we've got the British pound against the Swiss franc, a lot of upward price movement. If we switch it here, it starts to become a lot more 50-50. Okay. Yes, we got some very strong upward price movement, but before that and after that, we saw a collapse. So very big, a very different scenario. And then you can also take into consideration the euro against the British pound as well. An amazing thing about the euro against the British pound is that the spread is extremely low as well. And here, again, it's a very different scenario. The British pound is the second currency. It's just the simple way of me explaining it. So a decline is the British pound increasing in value. So if we are seeing the British pound increase in value against the euro, it is in line with technical analysis. Why? Because we're trading below the 75 bar exponential moving average. Trading below the 100 bar simple moving average. These two are crossed over downwards. So you can see here they're crossed over downwards. Also, ladies and gentlemen, we can take into consideration that the RSI is trading at 38. So generally speaking, it's very low and significantly lower than the 50 level, which is the neutral level. We're not seeing any divergence here. We've got still here, ladies and gentlemen, a higher low. We've got a higher high as well. So that's in line to what we're seeing on the on the RSI as well. So you can see very clear signals here, ladies and gentlemen, in terms of technical analysis. Now, what a lot of people do is they will draw a Fibonacci retracement level and look at 65% momentum. Okay. Some people may look at a different level of momentum. Some people may want more momentum before speculating the trend. Some people may want less momentum before speculating the trend. Now, we want to be 0.65% of momentum. We're going to follow the traditional trend and traditional theory. Now, because the wick, ladies and gentlemen, is very close to that, some people may opt to enter slightly lower, slightly later, anyway, because that's where the wick low is. In order to get an easier view of that, ladies and gentlemen, we can switch over to a smaller time frame. So the entry point, ladies and gentlemen, to speculate downward price movement is here. Is in line with technical analysis. This is a 200 bar simple moving average. We can see we're significantly below the 200 bar simple moving average. We're lower than the RSI as well. We're on the RSI, we're lower than 50, so we've got clear indications that sellers are gaining control there. And we can see here as well, we've got a bearish crossover, so crossover downwards as well. So these are all very clear signals for the for the British pound to increase in value against currencies. Like I said, it's the best performing currency, second best performing after the US dollar over this year so far. So it's not something that we haven't seen throughout the year. The only thing I would stay cautious about, and again, it depends on what currency you're going to trade it with, particularly if it's going to be the US dollar. The only thing I'll be cautious about is the fact that the announcement saw more people vote for an interest rate cut. Traditionally, when more people vote for an interest rate cut, it tends to be negative for the currency. And this scenario has been slightly positive, but especially if we're going to trade it against the US dollar, we need to be cautious. We need to be cautious. We need to be cautious because, of course, we have the Fed meeting later on, and also the US dollar is the best performing currency of the year, of yesterday, and of the past month. So we have to keep that in mind, especially because we're making our way up to that resistor level here. This is that resistor level, and also if we're going to draw Fibonacci retracement levels of the previous impulse wave, there you go. We're currently at that 50 mark. We are exactly at the 50 mark, which is a very traditional area of the market where a lot of the time a retracement, because this is basically retracing upwards, will lose momentum and start to move further down. Some people think it's at 60, some people say it's 50. There's not really a standard correct level. It depends on order flow. But anyway, that's a very key level in the market. So that's if we want to speculate that the pound's going to increase in value. Otherwise, ladies and gentlemen, if we want to speculate that the pound's going to decrease in value, we can take other assets, other currencies into consideration. The first one, of course, I will say because of the elections, is the US dollar. May not be today because yesterday the US dollar increased in value by 2%. So, how much more can it gain today? At least, and not until we get the Federal Reserve release their decision and also the press conference as well. So, one is there's benefits for the US dollar. The other is, ladies and gentlemen, the British pound against the Australian dollar, which I don't have here. So let's search it. There we go. Here we go, ladies and gentlemen. So the chart has loaded now. Here we can see the US dollar, the British pound against the Australian dollar. Very clear downward price movement. Like I said, it's the best performing currency of the day. We have got upward crossover. We're not above 50, the neutral level. We're just about at the neutral level, and we're still below 200 here as well. If we go to the 2 hour, that'll be very interesting as well. If we go to the 2 hour, again, we're below. So most indications is indication of downward price movement. The only thing to be cautious about is, of course, we had some upward momentum. So we don't want to trade against the trend. But what can we do? We can, for example, go to a 5 minute time frame. Let's zoom in as well. And again, draw Fibonacci retracement levels. 65%. If we get 65% momentum in the direction of the trend, then we can speculate another sell order potentially. So that's a signal based on technical analysis and based on Fibonacci retracement levels. Alternatively, what can we do? If we get a retracement, and let's say it retraces to here, it doesn't quite go to 65, and then it moves back upwards like so, then all we do is we bring up the entry point, because then we won't trade based on the Fibonacci retracement levels, but we'll trade based on the breakout. So that's a second option, a second scenario as well. Now, ladies and gentlemen, what is going to be the very big difference for tonight's Federal Open Market Committee rate decision and the Federal Reserve Chairman's press conference? Now that we've got a Trump presidency, a lot of things are potentially changing. And number one, a lot of migrant workers, so people that are working in America, but they're, should we say, illegal asylum seekers, they now potentially are going to face deportation. So the amount of employed individuals in America will decrease to a certain extent. Um, and also, maybe the employment sector will become slightly more imbalanced, slightly more tight. What that tends to do is increase inflation, so we definitely want the Federal Reserve to comment based on that. The other thing is we definitely want them to comment on how the economy is going to react to tariffs, because Trump has said he's definitely going to add tariffs to China, and most probably going to add them to the European Union as well. So that's another thing as well. So these are very important factors that we need to hear from the chairman of the Federal Open Market Committee. So if we go back to our calendar, ladies and gentlemen, and we look at tonight's announcements, here we go. So we definitely have here also something else which will create some volatility is this here, the initial jobless claims, also known as the US weekly unemployment claims. If that comes in lower than expected, because a lot of times in the past, we really tend over the past 3 months to see it lower than expected. We get it lower than expected, then that's positive for the US dollar, ladies and gentlemen. Also, if we get better than expected for here and here as well, again, it's better. It's positive for the US dollar. So this is why I said you need to be cautious about the British pound against the US dollar. The most important thing is though is here. Now, even though these two are red, they most likely aren't going to create any volatility, because it's almost fully priced into the market that the Fed will cut 25 basis points. The only way that will become important if it's not 25, if it's unchanged, if they choose to keep it unchanged, or if they choose to cut uh, 50 basis points. The statement more or less will remain unchanged. What is going to create a lot of volatility is this here. So the chairman of the Federal Reserve, Mr. Jerome Powell, which to be honest has clashed horns with Trump. Uh, Boy, he's been crashing horns with Trump for at least 5 years, at least. It's going to be very interesting to hear what he has to say in regards to tariffs, in regards to deporting migrant workers, in regards to how tariffs will affect inflation, how tariffs will affect the economy. Also, Trump is definitely known to uh, say to the American oil companies, pump, pump as much as you can, as fast as you can, as frequently as you can. And he said to try and bring the price of oil back down to $40, ladies and gentlemen. Also, he's going to try and de-escalate the Ukraine-Russia conflict and the conflict in the Middle East. That's going to be on the top of his target as well. So that brings down the price of oil as well. So number one, there's opportunity for oil there, but also we want the Federal Reserve to comment on that, because tariffs its effect on inflation, its effect on the economy, but then oil, again, that effect on the economy and the effect on inflation, because low oil prices is can have that ripple effect, the domino effect on inflation as well. So ideally, we want to get an indication, a feeling of whether the Federal Reserve is going to be more cautious with adjusting interest rates. So very simply, they're going to become less dovish. Now, if they're going to become less dovish, then we're going to expect potentially the continuation of the rise of the US dollar, and not against the British pound specifically, but generally speaking. Something we do expect, if people do want to speculate the rise in the US dollar, ladies and gentlemen, a lot of people probably will ask me, what against what currency, it would be beneficial. And again, ideally, it's against the worst performing currencies. So, worst performing currencies is the Swiss franc, the New Zealand dollar, the Canadian dollar, and the euro. Okay, very, very beneficial, ladies and gentlemen, because you will be trading without any. Um, out any conflicts there between the two currencies. I've got some questions here, so I'll answer some of these questions in a moment as well. But we want to hear if he's going to become less dovish. Now, if he's going to become less dovish, then that's positive for the US dollar. But if he comes out and says the fact that Trump has become president changes nothing, our view on interest rates do not change, the forward guidance remains the same. We've cut this month. We're likely to cut next month as well. We're going to continue to monitor data and be data driven, and so on and so forth. If we're going to get a scenario, then that can actually pressure the US dollar. Because one of the reasons why the Trump trade is the US dollar is because a massive percentage of that is because the economists and analysts and traders and large institutions believe the Trump president will make a less dovish Federal Reserve. But again, guys, that cannot be confirmed. But tonight, um, which is in just under 7 hours, if we do get that confirmation, either or, we can expect a lot of volatility. Not only with currencies, we've been speaking about currencies quite a lot, but also, ladies and gentlemen, with the Nasdaq, also with the Dow Jones. With the Dow Jones, ladies and gentlemen, let's go to a 1 hour time frame. The Dow Jones, like I said, had its best post-election performance in its history. Not in 5 years, not in a decade, not in a century, but in its history. So that's an amazing statistic, ladies and gentlemen. I spoke about that this morning, and the price was down here actually, and people were saying to me, is it really going to continue to rise? And I said to people, yes, it could, it could. QCom's earnings was released last night. I'll share QCom's earnings, ladies and gentlemen. So QCom earnings. This is a stock which is included in the Nasdaq and in the S&P 500. So if we go to the Nasdaq components, for example. By the way, these are the Nasdaq components for today. If we look at the top 10 influential stocks, only two are declining. And to be honest, Tesla is only declining by 0.01, so I wouldn't even say that's a decline. But let's just say it's a decline. 80% of the most influential stocks are increasing in value at the moment. If we're looking at all stocks that have 1% and above, so basically from the 24 stocks, 1, 2, 3, 4, 5, 6, 7. From the top 24 influential stocks, which have a weight of 1% and above, uh, only 7 are declining for the Nasdaq. But let's look at QComs just so I can explain why QComs is important. 19 here has a weight of 1.22%. That's more influential than Intuitive. It's more influential than Amgen. It's more influential than Applied Material. These are very, very large companies, ladies and gentlemen. So it's the 19th most influential stock. Okay, if we go to earnings, their earnings per share beat expectations by for almost 4 and 3 quarters. Revenue beat expectations as well. If we look at the previous quarter, earnings per share significantly increased. Revenue, ladies and gentlemen, increased by almost $900 million just in a quarter, not in a year, but in a quarter. And that's why, ladies and gentlemen, yesterday it was up at over 4%. And today it's up almost 6%, even before the market has opened. The market hasn't yet opened yet. So that's important for the Nasdaq and the S&P 500 because it's included in both, ladies and gentlemen. So that's why I said this morning in the market analysis, when people were saying, could it continue to increase? It's gone to an all-time high. Doesn't that mean it's going to collapse? Not always, guys. Sometimes the trend is your friend. It's not a very clear, trading isn't as easy as, if it goes up, speculate it's going to fall. If it goes down, speculate it's going to increase. Trading is not like that. And it's not that simple. We need to analyze the factors within the market and what effect Trump has on US equities, because it's predicted that it can be terrible for global stocks, even though we haven't seen global stocks decline. But people say it can be terrible for global stocks, but positive for US stocks. It's something we'll have to see. So far, though, this is what the market is pricing in, that is positive for US stocks. They're not going to do that for 24 hours and then the next day just make it completely collapse. So since then, guys, we've seen upward price movement of almost 0.30, almost 0.30. Now, again, if we go to a 2 hour time frame, guys, look at this. We're above both trend lines. We're at 72 for the RSI. We're not overbought on the RSI. The only negative thing here, ladies and gentlemen, is we have divergence. So that you can see here is declining, but this is increasing in value. So one is up, the other's down. Whereas really they should be in the same direction. So that's divergence. That can be a slight signal, ladies and gentlemen, that the price is overbought. But we don't have an official signal for the price being overbought though. So keep that in mind as well. Now, what's going to be very important for the S&P 500? Actually, I'll go to the Nasdaq for because we've spoken about the S&P 500. Generally speaking, for all U.S. stocks, whether it's an individual stock, whether it's the Nasdaq, S&P 500, or Dow Jones, they want the Federal Reserve to remain dovish. If the Federal Reserve again come out tonight and say, "I don't care that Trump has become president," tariffs doesn't mean that we have to become more hawkish. Deporting migrant workers doesn't mean we have to become more hawkish. Everything's going to remain the same. The agenda is the same. The forward guidance is the same. So it's still dovish in terms of their outlook. Then that's positive for the stock market. If they're going to become stricter, more cautious on adjusting interest rates, or even more hawkish, then that can definitely pressure the stock market. So the S&P 500 and the Dow Jones, because the Dow Jones, ladies and gentlemen, is also trading at an all-time high. You can see here. Potentially they will retrace, potentially they will correct. It's something that we have to keep on monitoring. But you can see clear upward momentum here, ladies and gentlemen. If we go actually to, let's go to a 30-minute time frame here. And we go to the Nasdaq. This is the Nasdaq. So you can see with the Nasdaq, ladies and gentlemen, we're trading above the Ichimoku trading cloud. We're on the upper side of the Bollinger Band. We're more or less at that upper band. And also the parabolic SARs are below. So all this is indicating upward price movement. The only thing I would say is switch over to a 5-minute time frame. All indications remain the same. We're still in the upper band. We're still above the Ichimoku trading clouds. Parabolic SARs are still below, which indicates upward price movement. The only thing, guys, is retracement. I want at least 65%. Okay, some people may want to be more cautious. If they want to be more cautious, they may opt for a breakout rather than just 65% momentum. So it could be any of these two entry points to speculate the continuation of further upward price movement. So again, that is the Nasdaq, ladies and gentlemen. So we've looked at potential indications for the Nasdaq, also for the S&P 500. What is very important for the Nasdaq and it's also going to be very important for the Dow Jones, because keep in mind the Dow Jones will replace Intel. Intel is one of the worst performing assets of this year. It's down more, almost 50%, ladies and gentlemen. So it's halved in value. That's why the Dow Jones will replace Intel with Nvidia, the best performing stock of 2023 and one of the best of 2024. So that can significantly support the Dow Jones, ladies and gentlemen. But it will also support the S&P, will also support the Nasdaq. If Nvidia stocks and Nvidia as a company and their earnings be expectations. Now, Nvidia will replace the Dow Jones, will replace Intel on the Dow Jones on the 8th after market close. So tomorrow after market close, they will replace it. And their earnings, ladies and gentlemen, if I'm not mistaken, there we go. It's on the 20th. So the 20th, ladies and gentlemen, is less than 2 weeks away. It's not next Wednesday, it's the Wednesday after that, and it will be after market close. So if, ladies and gentlemen, because earnings per share is expected to increase, revenue is also expected to increase as well. If they come in though higher than expected, that can really support the stock market, generally speaking. Yesterday, Nvidia stocks increased by 4% as well. So, ladies and gentlemen, that's it for today. Let's take a very quick look at the British pound against the US dollar. Look at this decline, ladies and gentlemen. I did say, guys, I did say at the very beginning, resistant level. If it's going to hit that level, then we could get some pressure. It's hit that level and we can see it's declined to this level here. But it's still very early. Let's keep monitoring it, ladies and gentlemen. So that's it for today. Elections from yesterday, Trump, trades, also Trump and his potential support for the US dollar, but we need that to be reconfirmed by the Federal Reserve tonight. The Federal Reserve, the main thing we want to hear is how their forward guidance is changing now that we've got a Trump president, a Republican Senate, and a Republican House as well. In addition to this, of course, Bank of England cut interest rates. More individuals voted for a cut though than what was previously expected. And tonight we need that confirmation from the Federal Reserve. So, ladies and gentlemen, that's it for today, guys. Trade safe, trade responsibly. Hopefully, you found today's session educational. In the meantime, though, enjoy the rest of your afternoon. Take care. Trade responsibly, trade safe. Take education, uh, serious. It's key, especially for the financial trading markets. But in the meantime, though, enjoy the rest of your afternoon.